Hello, my name is Josh Mahony, Chief Market Analyst at Scope Markets. I wanted to talk to you today about the impending US banks earnings coming out on Friday. It essentially kicks off US earnings season for the fourth quarter of 2023. Of course, last year saw plenty of volatility for these stocks as this idea that we could potentially see a hard landing did raise fears, and we saw big amounts of money set aside by these banks for potential bad loans. And there's going to be some question marks about whether they're going to feel emboldened to claw back some of that and in actual fact minimize the amount that's been set aside for those loans. There's a whole host of other factors to be looking out for. Bear in mind the back end of last year and the fourth quarter was a particularly good one for equity markets. So those banks that have a big trading desk will, of course, be expected to outperform and see potential profits coming from that area of the business. We also saw, in terms of the housing market, it has been relatively strong. We've seen it sort of move a little bit lower in some areas, but question marks around about demand are going to be key given the fact that we saw those elevated interest rates. In terms of interest rates, bear in mind that whilst we typically look for US banks to outperform at times where we see elevated interest rates from the central banks because that increases their margins, there's big question marks around some of these unrealized losses that some of these banks are holding on to because of that big sort of move towards the upside that many had not expected in terms of treasury yields. So certainly the outlook over whether they are benefiting from these higher interest rates or whether they essentially want interest rates to move lower sooner, that's going to be really key as we look out for some of these earnings. Let me bring you some of the numbers and what to look out for. These are the banks that we're looking out for in terms of Friday's report, and I'm going to take you through some of them in terms of the charts just now. So in terms of the sort of bigger picture since that last earnings report, we have seen outperformance in terms of the likes of Citibank and underperformance in terms of JP Morgan. Now, that is actually quite surprising because when you look at JP Morgan, it looks like a stellar chart. And ultimately, this comes because some of these companies have some catching up to do. So it doesn't necessarily mean that JP Morgan's not in particularly great shape compared to the rest of them. It's just that it has done better historically. So let's start off with that JP Morgan chart. This is the monthly time frame, and it shows you exactly what I mean. Ultimately, we're pushing back up into that big prior peak that we had at 173. We've essentially tagged it and started to falter somewhat. Bear in mind that as we often head into an earnings report, you will see people sort of take some money off the table, and we see some of that sort of trend start to unwind somewhat. Doesn't necessarily mean that we won't see a breakout through resistance. It just means that we could see some hesitation in the lead up to it. So certainly that resistance level at 173 is going to be absolutely key. For the near term, we have seen a breakout from this short-term trend playing out. You can see trendline support has been broken. We've also seen a move through support that we have around about here at 170.60. So I think there's a good chance of what we're looking at here is a wider Fibonacci retracement. So we'll be looking out for potential levels. Let me just add on some of the other levels. Potential levels to the downside you might be looking out for around 169, 168, 167 essentially. Those are your sort of three mid to deep Fibonacci levels of note. But certainly there's a good chance that we could see a breakout, but we'd need to see this 173 taken out to continue what has been an outstanding trend of late for JP Morgan. In terms of Bank of America, this, of course, is a big holding for Berkshire Hathaway, Warren Buffett's investment vehicle. And we've seen a rebound coming up from this 76.4 Fibonacci level. This is on the monthly time frame. So we're looking at a long-term picture. So the pullback that we've seen arguably provides people with an opportunity to get long an asset that clearly Warren Buffett has a lot of conviction in. And so there's a question mark, is this the beginning of the next sort of rebound and recovery for this market? As we zoom in, we can see that essentially the downtrend that has been playing out over much of the past 2 years appears to be broken with the fact that we've broken through 32.85. So near term, if we did see a pullback, I'm sure that might look like a potential bottoming formation and we see a potential retracement coming in play. But once again, for the near term, it's all about whether we can maintain this near-term trend that has been bullish. We've broken through resistance. We've got this ascending trend line in play here. So a 32.85 level being the prior resistance and this support level here. If that breaks, it points towards a wider retracement. But until then, this uptrend that's been playing out over the back end of last year looks to remain in play as we head into this earnings report. And then, like I said, we've seen outperformance in terms of Citigroup, but it doesn't necessarily look as healthy as the likes of JP Morgan. That's why I've been seeing this stock really trying to play catch up. What we can see here on the monthly time frame is this big zone of support. We have got this sort of potential ascending trend line, but this zone of support where you see bottoms around your 32 to 34 zone, that has come back into play. Now we front run that somewhat and we're seeing price action moving back up and rallying into your 54, 56 resistance level. What's notable here is you can see significant price action around about this zone, but you could almost say that this is sort of clear air because we've really flushed through these levels in a very swift manner in the past each time we come into these levels. So arguably, if we see a relatively strong outlook for this stock, you could again see that level as the kind of area that we sort of flush through rather than get sort of stuck within. You can see there's areas where we get stuck within and there's areas where we push through relatively swiftly. This zone above 54, 56 is that area that in the past we have pushed through in a meaningful manner. So certainly this is going to be a really interesting one to watch out for as we look out for whether it's potentially bottomed out here. But certainly from a sort of trend perspective, the near term, you can see once again this ascending trend line playing out. So as we pull back, there's a possibility that we find support once again. And in terms of sort of swing low support, we'll be looking at 51.19. If we break through that, then it looks like we've got a wider pullback in play. But until that happens, near-term downside does simply play into the uptrend that's been dominating the past 2 months. And finally, we're looking at Wells Fargo. We've seen a breakout through 48.84. That's that resistance level established back here in January of 2023. And so ultimately, we're looking at this as a potential bottom here. We're pulling back into that level. So as we drill down into the shorter term, you can see this sort of consolidation just above that breakout level. So are we going to hold on to that level and push higher? Well, arguably, you can see what happened last week on Friday, that rally up through that trend line, pointing towards a potential for a breakout, not necessarily looking as hunky-dory at the start of this week, but you can see with a bit more granularity here, the breakout through trendline resistance, the pullback, taking us into the Fibonacci, deep Fibonacci zone. Are we going to see this prior resistance and this deep Fibonacci zone playing out to provide us with a potential rebound for this market? That's certainly something worth bearing in mind as we head into this all-important earnings report coming from Wells Fargo, coming from JP Morgan, Citibank, and a whole host of other banks also coming next week as well. But we're starting off earnings season with a bang. We're looking for that financial sector to give us a good overview on the health of the economy as a whole. And certainly there are some signs from the wider perspective, from those long-term charts, that we may have bottomed out for these key banks over in the US.